Converting a multi-member LLC to a single-member LLC can have significant legal and tax implications. This video will guide you through the process, highlighting key steps and considerations to ensure a smooth transition. An LLC, or limited liability company, is a business entity that offers liability protection to its owners while providing flexibility in management and taxation. LLCs can be formed with multiple members or a single member, and the structure can change over time. There are several reasons why business owners might want to convert a multi-member LLC to a single-member LLC. These include changes in ownership, simplified taxation, increased control over decision-making, or as part of a broader business reorganization strategy. The conversion process involves several key steps. First, the remaining member must buy out the exiting members, following the terms outlined in the LLC's operating agreement. Next, the operating agreement itself must be amended to reflect the new single-member structure. This includes removing references to multiple members and revising decision-making processes. Many states require formal documentation to update the LLC's ownership structure. Check with your state's Secretary of State office to confirm the specific filing requirements. You may need to submit forms or notify relevant state agencies about the change in ownership. The conversion has significant tax implications. The Internal Revenue Service treats a multi-member LLC as a partnership by default, but a single-member LLC is considered a disregarded entity for tax purposes. This means that profits and losses pass through to the owner's personal tax return. If you prefer, you can elect to have your single-member LLC taxed as a corporation by filing IRS Form 8832. When converting from multi-member to single-member, the IRS views this as a termination of the partnership. You'll need to file a final partnership tax return using Form 1065 going forward. Unless you elect corporate taxation, you'll report business income and expenses on Schedule C of your personal tax return. Regarding your employer identification number, or EIN, you may need to obtain a new one if you elect corporate taxation. However, if you continue as a disregarded entity, your existing EIN may remain valid. It's crucial to update your business licenses, permits, and contracts to reflect the new ownership structure. Review and modify agreements with clients, vendors, and financial institutions. Inform these parties about the change to ensure smooth, ongoing operations. Throughout this process, maintaining compliance with state laws is essential to preserve the liability protection offered by the LLC structure. While the conversion doesn't inherently affect this protection, failing to follow proper procedures could potentially jeopardize it. In conclusion, converting a multi-member LLC to a single-member LLC involves several important steps: buying out other members, amending the operating agreement, updating state filings, addressing tax implications, and revising business documents. By carefully following these steps and seeking professional advice when needed, you can successfully navigate this transition and position your business for future success.